Let us see the next question. A German subsidiary of a US based MNC has to mobilize 1 lakh euro working capital for 1 year next 12 months. It has the following options. So basically there is a German company which is in need of 1 lakh euro for 1 year. For the purpose of raising funds, it has three options. Either it can borrow from German bank, or it can borrow from United States of America bank, or otherwise it can borrow from Swiss bank. What is the rate at which say they can borrow is provided to us. Banks in Germany charge an additional 0.25 percentage towards loan servicing. So instead of 5, we will be having cost of 5.25 percentage. Loans from outside Germany, that is say the dollar currency and Swiss franc currency, will attract withholding tax of 8 percentage on interest payment. So a kind of say the 8% is required to be paid for the repatriation of the funds. If the interest rates given above are the market determined, examine which loan is most attractive using interest rate differential. So we are required to decide that say from these three loans, which loan is least expensive. That is a question. I request all of you to go through the question, please. So friends, over here, you do not have to write anything. Let me explain you first of all. Simply the rate of interest is given to us. 5, 4 and 3. Then withholding tax information is given. In the first case it is not applicable. In the second case and third case it is 8 percentage. Then service charge is given to us. In the first case 0.25 percentage, and it is not applicable in the second and the third case. The amount of the funds which is required is euro 1 lakh. Like that the information is given. And from this information we are required to decide that say from where we should borrow funds. Do not write anything, let me explain you. As far as the German, that is say if at all we borrow in our domestic currency is concerned, then in that case the answer is very simple, 5% plus 0.25 percentage. So the total interest cost will be 5.25 percentage, or the effective cost of the borrowing is 5.25 percentage. Now understanding that what will be the cost of borrowing if at all you borrow in dollar currency. Everybody is requested to pay attention. We understand that say basically that say the in Germany say they have kept a law like this, that say when you pay interest to somebody, then in that case it becomes their income, and say we want you to pay tax on the income that say they earn say from you. That is what we understand is the withholding tax. So we understand that say the gross amount, then withholding tax and net amount. We understand that say the 4% is the rate of interest. So 1 lakh into 4%. So 4,000 is the cost of interest to you. However, it should be say after withholding tax, which is provided to us as 8 percentage. So we understand that say we can have the equation like this, that say every 100 rupees of the income, that is say the 100 unit of the income that they have, you have to pay 8 unit as tax to us. So it is 4,000 into 100 divided by 92. We understand that so you are required to do a kind of gross up. So 4,000 into 100 upon 92. That comes to 4347.83. Into 8%, that comes to 347.83. and net amount is, say we understand that say the 4,000 is what you have to pay over there. It means that say this 4% is say net of the withholding tax. So we can do simply a gross up like this: 4% divided by 1 minus 0.08. So 4 divided by 0.92, that comes to 4.3478, or we can take 4.35% also. That is what we understand is the cost of the interest taking into account say the withholding tax. Now friends, over here importantly the institute has given suggested answer in which, listen me carefully, they have taken into account the change in the rate of interest for the repayment of the principal. Yes, we understand that say their currency, I'm talking from the German that is the company point of view, their currency, that is dollar currency, has lower rate of interest in comparison to my rate of interest of 5%. So when I will make the repayment of the loan at that time, so the dollar currency would be appreciated in comparison to spot, and that is the reason so there will be some additional cost to me. So that additional cost consideration is taken into account by the institute for the purpose of repayment of the loan and not for the interest cost calculation. Now let us have understanding that say how to take the effect of the appreciation of the dollar currency say for the repayment of the principal. For that we can have say one of the two methods like this. The first method is say a kind of method in this way. Let us assume that say the spot exchange rate is 1.25 euro per dollar. Let us assume that say the spot exchange rate is this. We understand that say the borrow dollar, sell dollar, purchase euro. You invest this amount in the business for 1 year. At the end of the year, sell a euro, purchase dollar for the purpose of making repayment of loan. Fine, it sounds to be very simple. We understand that say basically we need an amount of 1 lakh euro. Okay, what is the spot exchange rate? 1.25 euro per dollar. So 1 lakh divided by 1.25. So you have to sell $80,000. Yes. You have to borrow $80,000. Yes. Borrow dollar, sell dollar, purchase euro. You invest that in the business. At the end of the year, you have to make repayment of loan. Yes, you have to make repayment of loan. In that say, $80,000 is required to be purchased from spot market for the purpose of repayment. That's also correct. What is the amount of the euro that say you have to sell? For that, the exchange rate is, listen carefully, 1.25 into 1.05 divided by 1.04, because you can very well understand that so the euro currency has high rate of interest. So 1.25 into 1.04 divided by, I'm sorry I spoke wrongly, 1.25 into 1.05 divided by 1.04, 1.2620, 1.2620. It is euro per dollar. Okay. Now, again you may use your calculator. 80,000 into 1.2620. That comes to 1,960,000. This is the amount of the euro that say you have to pay back. So can we say that say whatever the amount that you have used in the business and whatever the amount of the euro that you save, in that say there is a difference? Yes. What is the difference? Difference is 960. So 960 euro you have to pay more for every 1 lakh euro that you use in the business into 100, so it comes to 960 upon 1 lakh into 100, 0.96 percentage. This is the way, say we are supposed to make the calculation of answer of 0.96 percentage, that is the additional cost due to appreciation of the dollar currency, and that is supposed to be added over here in order to compute the effective cost. 4.35 plus 0.96, that comes to 5.31. And dear students, this answer can be called, that is calculated like using the simple logical formula. My currency has high rate of interest, their currency is having lower rate of interest, so 1.05, yes, divided by 1.04, yes, whatever the answer, minus 1, yes, into 100 for getting answer in percentage term. So this into 100 for getting answer in percentage term, and that comes to 0.96 percentage. This is also the way we can make the calculation. And importantly friends, you may take any rate other than 1.25. You take any rate, you will definitely find that say you have to pay 0.96% more for repayment of the principal. Chalo, write down answer. In this question, we have to decide from a German company point of view that whether to borrow in euro, dollar or Swiss franc. Second point, in case of euro borrowing, there is a loan service charge. Full stop. In case of dollar and Swiss franc borrowing, there is effect of withholding tax, comma, change in exchange rate effect. Full stop. Heading right down. Option number 1, borrow in euro currency. In that, rate of interest plus service charge. That's very simple. So in that case, it is 5 plus 0.25, that is 5.25 percentage. Option number 2, borrow in dollar currency. In that, write down rate of interest divided by 1 minus withholding tax plus 1 plus rate of interest of euro currency divided by 1 plus rate of interest of dollar currency whole minus 1. Rate of interest is 4 percentage, withholding tax is 8 percentage. So it is 4% divided by 0.92, that comes to 4.35 percentage, plus euro currency rate of interest is 5 percentage, dollar currency rate of interest is 4 percentage, minus 1, like into 100 for getting answer in percentage. So 1.05 divided by 1.04 minus 1 into 100, that comes to 0.96 percentage. Plus 4.35, so it is 5.31 percentage. This is a shortcut answer from examination point of view. Now I am dictating simultaneously the detailed answer. Detailed answer, in that gross interest, withholding tax and net interest. So we have to understand that, say, for 1 lakh euro at the rate of 4%, you have to pay 4,000. For every 100 euro of the interest, you have to pay withholding tax of 8. So net cost is 92. So what is the gross cost? It is 4,000 divided by 0.92. So it is 4348.83 into 8 percentage. So 347.83. 4347, I'm sorry. And this is 347.83. That is 434847.83 into 8 percentage. This is the way we are supposed to make the computation of the gross interest cost. For repayment of principal, we understand that, say, again there are two things. One is spot exchange rate. Let us assume it to be 1.25 euro per dollar. Dear students, making assumption for any other rate will give you the same answer, definitely. So borrow $80,000, that is 1 lakh divided by 1.25. spot transaction, sell dollar and purchase euro. And this amount is going to be used for 1 year. This is what you're going to do today. And after 1 year, what will happen? After 1 year, it will be like this. Exchange rate 1.25 into, for euro currency the rate of interest is 5%, and for dollar currency it is 4%. So 1.25 plus 5% divided by 1.04. So 1.2620. It is euro per dollar. So euro and dollar. So 1.2620 dollar. So euro is equal to $1. You have to make a repayment of 80,000 principal only. And for that, so this is the amount of the euro that you have to pay. So the answer is 1.2620 into 80,000 divided by 1. That does not make a sense. That is 1,960,000. This is the amount of the euro that you have to pay. So we understand that, say, in comparison to the amount that you have borrowed, the repayment is more. So we are having, say, the excess cost of 1,960,000 minus 1 lakh. That is 960 euro. So there are two expenses. One is 4347.83 and another is, say, 960. So here we understand that 4347.83 plus 960. This is the total cost that you have for using an amount of 1 lakh. One is the payment of the interest after considering like the withholding tax, because the rate of interest is only 4%, but we are required to consider the gross up value, because whatever the income that they are going to have, for that, so you have to pay tax to your domestic country. 4347.83 plus 960 divided by 1 lakh into 100, so it comes to 5.31%. This is the way we are supposed to consider the effect. Next, option number 3. In that, borrow from Swiss franc. So let us see in that case what will happen. Again, interest divided by 1 minus withholding tax plus 1 plus rate of interest for euro currency divided by 1 plus rate of interest for Swiss franc currency. Whatever the answer that we have, minus 1 into 100 for getting answer in percentage term. So the rate of interest is only 3%. That's very nice. So 3 divided by 1.1 minus 0.08. So 3 divided by 0.92. So it is 3.20, so it is 2609, or let us write 26 only, plus 1.05 upon 1 plus rate of interest for the Swiss franc currency is 3%, minus 1, 1.05 upon 1.03, minus 1 into 100 for getting answer in percentage term, so 1.94 percentage, plus 3.26, so ultimately it is 5.20. This is the way we will be having, so the option number 3 cost. Now finally we are required to take a decision wherein you have to make a comparison of the euro currency, then dollar currency, then Swiss franc currency. Effective cost. In the first case 5.25, in this case it is 5.20, and in this case it is 5.31. So we understand that so the euro is the selection that we do. So small summary of the entire answer. From a German company point of view, we have to decide that say from where to borrow. Option number 1 is that say we borrow from the euro currency, in that the cost is 5.25. Option number 2 is that we borrow in dollar currency, then the rate of interest is converted into pre-tax, plus appreciation of the dollar currency will be considered, so the effective cost is 5.31. The third option is borrow in Swiss franc, in which say we will be having say again the rate of interest is converted into pre-tax, and further we will be having say the extra cost, that is 1.05 divided by 1.03 minus 1, that comes to 1.94. So the overall cost is 5.20. And we'll make the selection of the Swiss franc currency, that is we should borrow from Swiss franc, sorry.